Using LEAPS options for a protective put strategy. Are you curious about how to use long-term equity anticipation securities options in a protective put strategy? Let's break it down in a simple way. A protective put strategy is a method used to manage risk when you own stocks. It involves buying a put option, which gives you the right to sell your stock at a set price, known as the strike price, before the option expires. This helps protect you from losses if the stock price drops. Now, when you combine this with LEAPS options, which are long-term options that can last up to 3 years, you gain extended protection. This is especially useful if you think the market might be volatile for a while. With a protective put using LEAPS, you can shield your investments over a longer time frame than with regular options. Let's look at how this works in practice. Suppose you own shares of a company that you bought for $100 each. You decide to buy a 1-year LEAPS put option with a strike price of $90 for $5. If the stock price falls to $80, you can exercise your put option and sell your shares for $90. This limits your loss to $10 per share, excluding the cost of the option. If the stock price rises to $120, the put option will expire worthless, and your only loss will be the $5 you paid for the option. Keep in mind that buying a LEAPS put option will increase your overall cost basis for the stock. In our example, your new cost basis would be $105 per share. This means you need to consider how much you are willing to pay for that peace of mind. Using LEAPS options also gives you flexibility. You can adjust your protective put strategy as market conditions change. If you feel more confident about the stock, you might choose to sell the put option. On the other hand, if you feel uncertain, you might buy additional puts for further protection. This strategy is particularly beneficial for investors who are optimistic about their stock but still want to guard against unexpected downturns. It allows you to keep the potential for gains while limiting your risk of losses. In summary, using long-term equity anticipation securities options for a protective put strategy provides a way to manage risk effectively. It combines long-term protection with the chance for significant gains, making it a smart choice for navigating uncertain market conditions.